All right, let's get right into it. What we're looking at today is a pretty incredible real-life financial case study. It all comes from a letter a woman sent to a financial advisor, and it's the story of someone at a major crossroads who got some of the most radical all-or-nothing advice I think I've ever seen.
So get this. This is how she starts her letter to the advisor. This isn't just someone asking for a stock tip, right? This is a plea. It's from someone who feels totally lost, and she's putting an unbelievable amount of faith in the advice she's about to get. You can just feel how high the stakes are from this one sentence.
So, who are we talking about here? Let's paint a picture of our protagonist. She's a 44-year-old immigrant mother living in Southern California. She knows what she wants. She wants a rich and worthy life for her family. But she's also completely overwhelmed and confused about how to actually make that happen. Okay, let's just feel the pressure here for a minute. She's 44 years old, trying to figure out a whole new financial system here in the US. And oh yeah, she's got 2 kids who are getting ready for college, which, as you know, is one of the biggest expenses a family can possibly have. So for her, getting her finances straight isn't just a nice idea, it's an emergency. Now, before we get to the wild advice she received, you gotta understand what her finances actually looked like. And trust me, it wasn't a simple, clean picture. It was a total mess, spread out over 2 countries with a bunch of different assets that were, well, let's just say they weren't exactly working for her. So on paper, you'd think she's in a fantastic spot. She's got 2 properties in Southern California, her own home worth $800,000 and an investment property worth $600,000. And the best part? No mortgages. They're all paid off. That's $1.4 million in pure equity. A great foundation, right? Well, this is where things start to get complicated. And boom, here's the full picture of the chaos. Her assets are all over the place. Sure, she's got some decent US stocks, but her Roth IRA, it's trapped inside an insurance company, stuck in a high-fee annuity. She's got property back in China that, in her own words, is a losing investment. But the real kicker, the absolute worst part, is this life insurance policy. She's paid $600,000 into it, and its cash value today is only $400,000. Ouch. So the advisor sees all of this, and his reaction isn't gentle. He doesn't tiptoe around it. His response is basically a financial fire alarm. He sees her current path not just as inefficient, but as a total dead end. For him, a change isn't just a good idea, it's an absolute emergency.
This is his exact reaction to her life insurance policy. He doesn't see a complex financial product, he sees a trap. He calls it a scam artist's trick. That one aggressive question just cuts through everything and tells you exactly what he thinks. She is being taken for a ride.
Let's break down this tug-of-war. She's stuck in what's called the sunk cost fallacy. You know that feeling, right? I've already put so much time and money into this, I can't walk away now. That's her with the $600,000. The advisor's view is brutally simple. He's saying, that $600,000 is gone. It's history. The only number that matters is the $400,000 you can get today and what that money could be doing for you instead. And this is his final knockout punch. He tells her that this policy isn't just a lazy, underperforming asset. He calls it her enemy. He's framing it as something that is actively working against her financial goals every single day she holds onto it. So the big question is, what's the battle plan? Okay, so let's get to the solution. And his plan? Well, it's not a small tweak. It is a complete teardown and rebuild of her entire financial life. And it all boils down to 2 big ideas: radical simplification and extreme concentration. Here's the blueprint, and wow, is it bold. Step 1. Liquidate. Sell the investment property, and he even suggests she think about selling her own home. That's a massive move. Step 2. Cancel. Cut the cord on that enemy insurance policy right now. Step 3. Consolidate. Take the cash from the insurance, get the money out of that bad Roth IRA, and pull it all into one single US brokerage account. And then, the most radical step of them all, concentrate. Put every last dollar into one single investment. And what is that one investment? It's QQQ. For anyone who doesn't know, it's an ETF that tracks the NASDAQ 100. Let's be really clear what that means. This isn't a safe, diversified, buy-the-whole-market kind of move. This is a high-conviction, concentrated bet on the 100 biggest, baddest tech and growth companies on the planet. So you're probably wondering, why on earth would he suggest something that sounds so risky? Because he believes the potential reward is just as extreme. He doesn't just give her a plan, he gives her a very specific, very tantalizing glimpse of what could happen if she follows it.
So let's focus on that insurance policy, the one she was so afraid to let go of. The advisor tells her to forget about the money she lost and focus on the $400,000 she can get back. So what could that 400 grand become?
And here's the projection he lays out for her. That $400,000, if invested in QQQ, could double to $800,000 in just 3 to 5 years. And in 10 years, it could quadruple, hitting $1.6 million, maybe even more. He's completely reframing the decision. It's not about cutting a loss. It's about unlocking a massive potential gain.
This chart just lays out the choice in the starkest terms possible. On one side, she can wait and hope her insurance policy maybe gets back to even someday. On the other, that same money could potentially grow 4 times over. The contrast is it's dramatic, and it's designed to force her to make a choice. And that really brings us to the core question of this entire story, and it's a question for all of us. The advisor's plan offers the potential for life-changing returns, but it asks you to throw out the #1 rule of investing, diversification. It asks you to accept the risk of putting all your eggs in one very powerful basket. Is that a trade-off you'd be willing to make?
Now, before we wrap up, we have to be crystal clear about something. This has been a fascinating deep dive into one specific situation and one advisor's very aggressive opinion. This is not investment advice. Any strategy, especially one this concentrated, carries significant risk. You should always do your own research and make decisions based on your own personal financial situation. Thanks for tuning in.